Test.com's Life and Health Insurance Agent Practice Test. For complete practice, try our full-length 400-question Life and Health Insurance Agent Practice Exam Kit with fully explained answers, testing tips, and more. General Life Insurance Basics, Insurable Interest, Parties and Regulations. Question 1. All of the following are parties to a life insurance contract except 1. Insurer, 2. Underwriter, 3. Beneficiary, 4. Owner, 5. Insured. A. 2 only, B. 3 only, C. 2, 3, and 5, D. All are parties to a life insurance contract. C. 2, 3, and 5. A beneficiary and the underwriter are not parties to a life insurance contract. An insured may be, but is not necessarily a party. A wife, owner, can take a policy out on her husband, insured, yet the husband is not a party to the insurance contract. Question 2. Which term refers to the period during which a policyholder can pay the overdue premium without losing the policy? A. Grace period, B. Probation period, C. Evaluation period, D. Waiting period. A. Grace period. The grace period is a specific period of time after the due date of a premium during which the policy remains valid without penalty. In most states, the grace period is 30 days before the policy lapses. Underwriting could be considered an evaluation period. Waiting periods can be in effect before a death benefit is paid, and a probation period is not applicable to life insurance. Question 3. James makes a good living and got a life insurance policy for the benefit of his wife. He recently experienced a life-changing event with the birth of his daughter. James should A. Cancel his life insurance policy to afford to support his new daughter, B. Decrease his life insurance policy death benefit to get a cheaper policy, C. Increase his life insurance policy death benefit, D. Stop paying premiums on his life insurance policy. C. Increase his life insurance policy death benefit. Whenever an insured has a major life event, such as marriage, the birth of a child, or the purchase of a new home, they should reevaluate their life insurance needs. In this particular case, James would need additional life insurance coverage, as his newborn daughter's care will likely depend a great deal on financial support provided by James. Question 4. Mr. Smith, a whole life insurance policy holder, needs funds for his nursing home expenses. Which part of the policy could he access for these funds? A. The investment benefits, B. The death benefits, C. The annuity benefits, D. The living benefits. D. The living benefits. Life insurance policies can provide living benefits, which means that the policyholder can use funds from the cash value, as well as some or all of the death benefit amount prior to death. The amount that is taken from the death benefit will be subtracted from the amount received at the insured's death by the beneficiary. Types of life insurance policies and individual versus group life insurance. Question 5. Jack and his wife Lynn just purchased a home with a 15-year mortgage. Wanting to make sure that Lynn would be able to pay off the mortgage balance in the event of Jack's death, Jack had a temporary need for life insurance. What type of policy should Jack purchase? A. Whole life insurance, B. Term life insurance, C. Variable life insurance, D. A viatical settlement. B. Term life insurance. Given Jack's temporary need for 15 years of coverage to pay off the mortgage balance, the best choice for Jack would be a 15-year term life insurance policy, as the premiums would likely be far less than a permanent policy, and once the mortgage is paid off in 15 years, this particular need for Jack will no longer exist. Question 6. What is a key characteristic of group life insurance? A. It is generally purchased individually. B. Coverage amount is based on individual health assessments. C. It is often part of an employer or membership benefit package. D. Premiums are significantly higher than individual life insurance policies. C. It is often part of an employer or membership benefit package. Group life insurance typically offers coverage to members of a group, such as employees of a company or members of an association, as part of a larger benefits package. Premiums are often lower than they are for individual policies. Question 7. Which type of life insurance policy covers the insured for a specific period and pays out a benefit only if the insured dies during that period? A. Variable life insurance. B. Whole life insurance. C. Term life insurance. D. Universal life insurance. C. Term life insurance. Term life insurance is designed to offer life insurance protection for a specific period or term. Common term limits include 10, 20, and 30 years. Variable, whole, and universal life insurance are types of permanent life insurance that a policyholder can maintain until they terminate premium payments or upon the death of the insured. Question 8. Which of the following is a type of permanent life insurance that offers both a death benefit and a cash value component? A. Term life insurance. B. Universal life insurance. C. Decreasing term insurance. D. Renewable term insurance. B. Universal life insurance. Universal life insurance is a type of permanent life insurance that includes a death benefit and a cash value component, which can accumulate over time. Term life insurance policies only provide a death benefit. They don't accumulate cash value. With decreasing term insurance, the policy's death benefit will decrease over time, and renewable term insurance refers to the policyholder's option to renew the coverage when the initial term expires. Question 9. Which type of life insurance is considered to be more risky based on its investment component? A. Level term life insurance. B. Whole life insurance. C. Decreasing term life insurance. D. Variable life insurance. D. Variable life insurance. Because the underlying investments are equities, such as mutual funds, variable life insurance policies are considered to be securities. As these investments move up and down with the movements of the equities market, variable life insurance is considered to be more risky than other types of policies, as there is the probability that the value of the policy's investment component could decrease. Life insurance application and underwriting. Question 10. Life insurance underwriters look at a variety of factors when determining the acceptance of an applicant. These factors can include A. Health history. B. Occupation. C. Hobbies. D. All of the above. E. Both A and B only. D. All of the above. Underwriters look at many factors that can deem an applicant for life insurance as being more or less risky. These criteria can include hobbies, occupation, lifestyle, gender, age, income, and many more. Question 11. What does underwriting in life insurance involve? A. Determining the policy type. B. Evaluating the risk of insuring a person. C. Choosing the beneficiaries. D. Deciding the policy duration. B. Evaluating the risk of insuring a person. Underwriting is the process by which insurers assess the risk associated with an insurance applicant. Medical records and medical exam results are sometimes used by underwriters to determine insurability. A, C, and D occur during the application process. Question 12. In a life insurance contract, the principle of utmost good faith implies A. The insurer must cover all claims. B. The insured and insurer must disclose all relevant information. C. The policy is guaranteed to be profitable. D. The premiums are fixed for life. B. The insured and insurer must disclose all relevant information. Utmost good faith mandates that both parties to the insurance contract must deal in good faith, disclosing all material facts. Incomplete or misleading information submitted on an application by the insured can result in the contract being voided and a death benefit not being paid. Question 13. Which of the following needs to have an insurable interest for an underwriter to issue an insurance policy? A. Owner. B. Insurer. C. Beneficiary. D. Insured. C. Beneficiary. The person or entity that is the policy beneficiary will have an effect on the acceptance of the policy. This is because the beneficiary must be at risk of suffering some type of loss should the insured pass away. Selling life insurance, determining coverage needs, and issuance and delivery. Question 14. Which of the following deals with a set of relationships where one person is authorized to act on behalf of another in order to create a legal relationship with a third party? A. Law of principles. B. Law of agency. C. Law of third parties. D. None of the above. B. Law of agency. The law of agency regulates the relationship between agents and principals, as well as agents and third parties with whom they deal on the principal's behalf. Question 15. All of the following can be considered life-changing events that could result in a change in the amount of life insurance coverage needed, except 1. Birth of a child. 2. Divorce. 3. Marriage. 4. Change in job title. A. 1, 2, and 3. B. 2 and 3 only. C. 1 only. D. 4 only. D. 4 only. While a new job with a drastic change in income and/or hazardous duties could result in a change of life insurance coverage needs, simply changing job titles will not. Question 16. When conducting a life insurance needs analysis, what factors should be considered to determine the amount of coverage needed? A. Current age of the policyholder. B. Policyholder's hobbies and lifestyle. C. Number of dependents and future financial obligations. D. All of the above. D. All of the above. Age, lifestyle, dependents, and future financial obligations should all be taken into account during the information gathering process to determine the recommended face amount and policy type. Life insurance for business owners and in estate planning. Question 17. Term life insurance should always be used in buy-sell agreements. True, false. False. Permanent life insurance should be used with buy-sell agreements in order to ensure that the insured will not need to requalify for life insurance after a certain amount of time elapses. Question 18. In estate planning, how does life insurance typically benefit the policyholder's beneficiaries? A. By serving as collateral for loans. B. By covering estate taxes and final expenses. C. By acting as a primary investment vehicle. D. By directly transferring business ownership. B. By covering estate taxes and final expenses. In estate planning, life insurance can provide the necessary funds to cover estate taxes and other associated final expenses, such as medical and funeral costs, thereby preserving the value of the estate for the beneficiaries. Question 19. For a small business owner, how can life insurance be instrumental in ensuring business continuity? A. By covering operational costs. B. By providing funds to buy out a deceased partner's share. C. By paying creditors. D. All of the above. D. All of the above. Life insurance for business owners can be crucial in buy-sell agreements and ensures business continuity. It is indispensable when the death benefit is used to purchase the deceased partner's share from their estate, cover operational costs during the transition, and pay creditors asking for payment when the business owner passes away. Question 20. Corporate-owned life insurance proceeds may be used for the following purposes. 1. To find, replace, and train a new employee or executive. 2. To fund other corporate debt obligations. 3. To redeem the deceased employee's stock. A. 3 only. B. 1 and 3 only. C. All of the above. D. None of the above. C. All of the above. There are many purposes in which the proceeds of corporate-owned life insurance may be used. Policy components, riders, and non-forfeiture options. Question 21. What is the most common component in all life insurance policies? A. Living benefits. B. Waiver of premium. C. Death benefit. D. Cost of living rider. C. Death benefit. While there are many different options and riders on life insurance, all policies possess a death benefit. Question 22. Which of the following is a type of non-forfeiture option in a life insurance policy? A. An option to receive reduced paid-up insurance. B. An option to receive cash surrender value. C. An option to terminate the policy without receiving any benefits. D. A and B only. D. A and B only. Non-forfeiture options allow policyholders to receive benefits from their policy even if it lapses, typically in the form of reduced paid-up insurance, extended term insurance, or a cash surrender value. Reduced paid-up insurance is permanent insurance with a lower face amount. Extended term insurance will expire at a future date, and the cash surrender value will be less than the policy's cash value. Question 23. Permanent life insurance policies always have two components. What are they? 1. Death benefit. 2. Cash value. 3. Living benefits. 4. Conversion benefit. A. 1, 2, 3, and 4. B. 1, 2, and 3. C. 2 and 4. D. 1 and 2. D. 1 and 2. Permanent life insurance policies consist of both a death benefit component and a cash value component. Claims, settlement options, and tax concepts. Question 24. A beneficiary on a life insurance policy will receive what value upon the death of the insured? A. Cash value. B. Surrender value. C. Investment value. D. Death benefit. D. Death benefit. The death benefit is the amount that is paid to the policy beneficiary upon the death of the insured. Should a permanent life insurance policyholder decide to cancel the policy prior to the insured's death, they will receive the amount of the cash surrender value. Question 25. What is a settlement option in a life insurance policy? A. The method chosen by the insurer to pay out claims. B. The way a beneficiary chooses to receive the death benefit. C. The process of disputing a claim with the insurer. D. The options for investing the policy's cash value. B. The way a beneficiary chooses to receive the death benefit. Settlement options refer to the various ways in which the proceeds from a life insurance policy can be paid out to the beneficiaries, such as a lump sum, installments, or an annuity. If not specified by the policyholder at the time of application, the beneficiary can choose the settlement option. For complete practice, try our full-length 400-question Life and Health Insurance Agent Practice Exam Kit with fully explained answers, testing tips, and more. Question 26. John, who had a life insurance policy with a death benefit, died on August 31st after a long bout with cancer. He had been hospitalized for a month before his death. His wife contacted the insurance company to file her claim for the death benefit on September 5th, after John's burial and after she had time to collect her emotions to deal with her personal loss. The insurance agent filed the papers to process the claim with his supervisor, and the death benefit was settled on October 30th. Were any laws violated in this scenario? A. No. The agent filed the paperwork within 30 days of the claim. B. Yes. The claim was not settled within 30 days of the claim. C. No. There are suspicions around the death of John. D. Yes. The claim was not settled within 15 days of the claim. B. Yes. The claim was not settled within 30 days of the claim. Although it typically takes approximately 2 weeks to settle death benefit claims, insurance companies are required to settle such claims within 30 days. Some claims may require additional time if they require additional investigation. Here, there is nothing suspicious about John's death. Living benefits and viatical and life settlements. Question 27. Which of the following is a rider that allows a terminally ill person to access at least a portion of the death benefit proceeds prior to death? A. Waiver. B. Living benefit. C. Supplement. D. Addendum. B. Living benefit. A living benefit on a life insurance policy is typically a policy rider that allows an insured who has a qualifying terminal illness to access some or all of the death benefit proceeds in order to pay medical bills or other financial obligations. The death benefit proceeds on the policy will be reduced by the amount that is accessed by the insured. Question 28. What distinguishes a viatical settlement from a life settlement? A. Viatical settlements involve terminally ill policyholders, while life settlements do not. B. Viatical settlements are for older policyholders, while life settlements are for younger ones. C. Life settlements always involve a lump sum payment, while viatical settlements do not. D. Viatical settlements are tax-free, while life settlements are taxable. A. Viatical settlements involve terminally ill policyholders, while life settlements do not. In a viatical settlement, a terminally ill policyholder sells their life insurance policy at a discount from its face value for immediate cash, whereas a life settlement involves the sale of a life insurance policy by a policyholder who is not necessarily terminally ill. Question 29. Living benefits on a life insurance policy can be typically accessed via A. Lump sum. B. Regular installments. C. Loan. D. All of the above. E. Both A and B. E. Both A and B. The living benefits that are accessed from a life insurance policy can typically be taken out either in one lump sum amount or they could be received via regular installments. With the installment method, the insured may wish to use these funds to pay his or her ongoing monthly bills. General health insurance basics, regulation, and social health insurance. Question 30. The insured party has no part in determining the wording of an insurance contract. In this respect, insurance contracts are considered to be blank. A. Contracts of adhesion. B. Contracts of forbearance. C. Contracts by regulation. D. Contracts by law. A. Contracts of adhesion. If a contract contains unclear wording, then a court will interpret the language used against the writer of the contract, unless the wording that is used is required by law to be stated in a specific way. Question 31. What role does government regulation typically play in health insurance? A. It determines the medical procedures covered under all insurance plans. B. It sets the premium rates for private health insurance companies. C. It establishes standards and guidelines for health insurance policies. D. It directly provides health insurance to all citizens. C. It establishes standards and guidelines for health insurance policies. Government regulation in health insurance often involves setting standards for policy provisions, ensuring customer protection, and overseeing the practices of insurance companies to maintain fairness and accessibility in the market. This is typically done at a state level through each state's Department of Insurance. It does not directly provide health insurance to all citizens, nor does it determine which medical procedures are covered, nor set premiums. Question 32. A and blank in an insurance contract is a statement by the issuing insurance company that sets out the essential element of insurance to pay for losses covered in the policy. A. Beneficiary designation. B. Premium amount. C. Insuring clause. D. Rider. C. Insuring clause. This promise of covering losses is in exchange for the premium that is paid by the insured and the compliance with the policy terms. Types of health insurance policies and HMO and PPO. Question 33. Which of the following is not a form of health insurance? 1. Dental insurance. 2. Vision insurance. 3. Disability insurance. 4. Long-term care insurance. A. 1 only. B. 2 only. C. All of the above. D. None of the above. D. None of the above. All of the above are types of health insurance policies. Question 34. What is a key difference between a PPO, Preferred Provider Organization, and an HMO, Health Maintenance Organization? A. PPO plans offer more flexibility in choosing healthcare providers outside the network. B. PPO plans only cover preventative care services. C. HMO plans typically have higher out-of-pocket costs than PPOs. D. HMO plans offer a wider choice of healthcare providers and specialists. A. PPO plans offer more flexibility in choosing healthcare providers outside the network. Unlike HMOs, PPOs allow members to see providers outside of their network without a referral, although at a higher cost. HMO members must first see their chosen primary care provider, PCP, to receive care, and can then be referred to a specialist if needed. Question 35. A business client is looking for ways to decrease its monthly premiums. To get down to the premium level sought after by the company, the agent realizes they have to go to a high-deductible health plan. As part of your advice to the business, what should you include in your discussion? A. HMO. B. PPO. C. POS. D. HSA. D. HSA. Health savings accounts, HSA, are used with high-deductible insurance policies. With an HSA, money that is saved on the premium may be put into the account, and then funds are used for certain medical fees. Because the funds in the HSA account can be used for medical services, participants often use them for uncovered procedures, such as chiropractic visits or other health-related services that are not covered by their insurance policy. Health insurance policy components and exclusions. Question 36. The components of a long-term care insurance policy include all of the following except A. Elimination period, B. Benefit amount, C. Own occupation, D. Benefit duration. C. Own occupation. Own occupation is a type of benefit trigger that is found in a disability insurance policy, not in long-term care insurance policies. An elimination period in a long-term care insurance policy is the number of days that an insured must pay for their care after a qualifying claim, but before benefits begin to pay, such as with a deductible. The benefit duration in a long-term care policy states how long benefits will be paid to an insured, and the benefit amount may be stated either as a daily or monthly amount. Some recent long-term care insurance plans also offer a lump sum benefit payout option. Question 37. Which of the following is a common exclusion in most health insurance policies? A. Emergency room visits, B. Cosmetic surgery, C. Annual physical exams, D. Prescription medications. B. Cosmetic surgery. Most health insurance policies do not cover cosmetic surgery as it is generally considered elective and not medically necessary. In contrast, emergency room visits, annual physical exams, and prescription medications are typically covered as they are essential for maintaining health and treating illness. Question 38. When constructing a major medical insurance policy, several criteria must be established, including A. Policy deductible, B. Maximum out-of-pocket amount, C. Elimination period, D. All of the above, E. Both A and B only. E. Both A and B only. While major medical insurance policies typically have high deductibles, these must be established in the policy as well as the maximum amount of out-of-pocket costs that will be paid by the policyholder. The elimination period is not part of a major medical insurance policy. Selling health insurance, issuance and delivery, and tax considerations. Question 39. As a marketing tool, Ted, a health insurance agent, offered to send an applicant and his wife on a weekend vacation to a local resort to induce the applicant to purchase a policy. Is this practice permitted, and if not, what is it called? A. No. Misrepresentation. B. No. Twisting. C. Yes, it is perfectly acceptable. D. No. Rebating. D. No. Rebating. Rebating is the act of offering an applicant an inducement to purchase insurance. It is prohibited as an unfair trade practice. Another example would be returning a portion of the applicant's policy premium from the agent's commission. Question 40. An agent is in need of generating business. He gets an idea of asking his client to let his policy lapse so that the agent can sell him a new similar policy. Is this permissible, and if not, what is this action called? A. No. Rebating. B. No. Bait and switch. C. No. Twisting. D. Yes, it is perfectly acceptable. C. No. Twisting. Twisting involves an agent suggesting that an individual let their current insurance coverage lapse in order to purchase a new policy, typically with similar benefits. It is a prohibited activity. In this case, the new policy does not necessarily benefit the client. However, the agent will likely receive a commission on the sale of the new policy. Question 41. Sarah, a health insurance agent, is finalizing the delivery of a health insurance policy to a client. She explains that policy delivery is more than just handing over the document. What additional step should Sarah emphasize is crucial during the policy delivery process? A. Immediately starting the coverage as soon as the policy is handed over. B. Thoroughly reviewing the policy with the client to ensure understanding and accuracy. C. Advising the client to store the policy in a secure location. D. Encouraging the client to immediately start looking for additional coverage options. B. Thoroughly reviewing the policy with the client to ensure understanding and accuracy. Sarah should emphasize the importance of a detailed review of the policy upon delivery, ensuring that the client understands the coverage, terms, conditions, exclusions, and their rights under the policy. The other options, while relevant in different contexts, do not specifically pertain to the complexity and importance of the policy delivery process. Deductibles and copayments. Question 42. A blank is the amount that an insured person is expected to pay for medical expense at the time of the visit. A. Deductible. B. Reimbursement. C. Corridor. D. Copayment. D. Copayment. A copayment is the amount or portion of the total cost that is the patient's responsibility upon receiving a medical service such as an annual checkup. Question 43. How does the choice of deductible affect health insurance premiums? A. Higher deductibles are associated with higher premiums. B. Lower deductibles generally lead to lower premiums. C. Higher deductibles typically result in lower premiums. D. The deductible amount has no impact on premium rates. C. Higher deductibles typically result in lower premiums. When a policyholder chooses a higher deductible, it means they are willing to pay more out of pocket before their insurance coverage starts. This higher initial cost sharing reduces the insurer's risk, often leading to lower premium costs. Conversely, choosing a lower deductible, which reduces out-of-pocket costs for the insured, generally results in higher premiums since the insurer is taking on more risk. Question 44. The deductible in a long-term care insurance policy is referred to as the A. Deductible. B. Coinsurance. C. Elimination period. D. Copayment. C. Elimination period. A long-term care insurance policy's elimination period is the number of days that the insured must pay for services out of pocket until the insurance coverage begins to pay. Health insurance claims and indemnity versus reimbursement. Question 45. On a health insurance claim form, the exact procedures that were performed for the insured are represented by standard codes that are referred to as A. RVU codes. B. AMA codes. C. HCPCS codes. D. CPT codes. D. CPT codes. Each CPT also corresponds to one or more International Classification of Diseases, ICD-9, codes. For example, 99214 may be used for a physical and 90658 indicates a flu shot. Question 46. What is the difference between indemnity and reimbursement in health insurance? A. Indemnity plans provide a fixed benefit regardless of actual expenses. Reimbursement plans pay back actual expenses. B. Reimbursement plans offer a wider network of doctors than indemnity plans. C. Indemnity plans require referrals for specialists. Reimbursement plans do not. D. Reimbursement plans have higher premiums than indemnity plans. A. Indemnity plans provide a fixed benefit regardless of actual expenses. Reimbursement plans pay back actual expenses. In an indemnity plan, the insurer pays a predetermined amount for a covered service, regardless of the actual cost. In contrast, a reimbursement plan reimburses the actual expenses incurred up to the policy's coverage limits. Question 47. What type of notice is used to show all of the services or supplies that were billed to Medicare during a 3-month period what Medicare paid and what the patient may owe the provider? A. MSN, B. CPT, C. OPPS, D. HCPCS. A. MSN. A MSN, or Medicare Summary Notice, can also be checked for any changes to a patient's claims. Disability and related insurance and seniors and special needs individuals. Question 48. As a professional surgeon, which type of disability coverage would offer the most liberal definition of benefit triggers for the policyholder in terms of benefit receipt if the insured were to break his or her hand? A. Own occupation, B. Employer provided, C. Social Security, D. Business overhead. A. Own occupation. Own occupation offers the most liberal definition of disability, as the insured is considered to be totally disabled if he or she is unable to engage in the principal duties of his or her own occupation. Question 49. Social Security should be considered one's primary source of disability income coverage. True? False? False. Although Social Security may provide disability benefits, in the majority of cases, these benefits are inadequate. Therefore, Social Security disability benefits should only be used to supplement an individual disability income policy. Question 50. What does own occupation mean in a disability insurance policy? A. The policy covers disabilities resulting only from occupational hazards. B. The policyholder is insured against disability in any occupation they are qualified for. C. The policy provides benefits if the policyholder cannot work in their specific occupation due to disability. D. The policy covers only short-term disabilities related to the policyholder's current job. C. The policy provides benefits if the policyholder cannot work in their specific occupation due to disability. An own occupation disability insurance policy defines disability as the inability to perform the duties of one's own occupation. This means the policyholder can receive benefits even if they are capable of working in a different occupation. Thanks for watching Test.com's Life and Health Insurance Agent Practice Test. For complete practice, try our full-length 400-question Life and Health Insurance Agent Practice Exam Kit with fully explained answers, testing tips, and more.